Hey, alright, this is my trade log for the 19th of Feb. So the market's shut. It's about 6:15 in the morning, and I'll just show you what's going on very briefly. So there's not a lot of action on the market. So the US market's just about to close, or just closing, I believe, and it was down a fair bit, but it's just down 0.5% now. It's still open. Not a massive move. After yesterday went down 2.5 or 2.2%, something like that. But the Aussie market hasn't followed the way that it usually will. But any of those follow-on movements are just going to be pent up until Monday when the market opens, because it's Saturday here. So what I thought I might show you is this little graphic in this trade log. So I thought it'd be a good idea to show you the structure of how I actually build or manage the trades in my account, and how much exposure I have. I'll go into more detail on this in some other videos in terms of the exposure amount, the margin amount, but this is basically what I'm doing every month in the current live strategy, and then I'm refining it in the paper trading strategy that will come into the live strategy across multiple accounts soon. First up, if you just start up here in the top right hand corner, imagine this is just time running in this direction horizontally. You start up here, I set my first iron condor, and this is always rolling constantly. So every month I'm doing this, unless I don't trade because something really serious is going on in the market, but it's pretty rare. The first time I set my iron condor number 1, there'll be other videos explaining specifically how to build those positions and how they work. So for example, that might be set on the 15th of December 2021. The idea is that there's a 7 to 5 week time window before that condor expires. So expiry and effectively total payday comes 7 to 5 weeks later if they go all the way to expiry. After that time elapses, I'll set my second condor while this one is still open, with a similar 7 to 5 week window of time. That 7 to 5 weeks depends on what volatility is doing, so basically how expensive or cheap things are, and also other factors like, can I get filled on the prices that I want? If I don't, then I'll leave it for another day, so I might push it out. If I don't get filled, then sometimes I miss a month. I prefer not to trade rather than not get the prices I want. Again, something I'll go into later. But in this example, in terms of timing, I might put that one on January 30. So this condor was started on the 15th of December. This one started on the 30th of Jan, might be a few days before, might be a few days after. And its expiry goes through in March. That's generally how I'm managing it with all of the contracts in the accounts. There's 2 condors live at any time. Now, this might change in the future, but this is what it's live as at the moment. And the most significant moment of exposure is this 2-week period here, and it's currently a weakness in the trading strategy that I'm trying to figure out in terms of supporting with insurance contracts. Is how to minimize my exposure at that time, because there's 2 condors, and it exposes you to a lot of potential downside. More videos coming on that. Some of them have already been explained in the back testing that I'm doing. But this is generally how the accounts are set up, and I'm constantly just resetting. There's a window of time now that I'm in with my existing contracts where I don't have 2 live, and I'll be looking for trading opportunities to enter for the next contract, which will be here. So it'll be coming underneath. Now this one's expired. I'll be coming in within the next 10 days. There'll be another one coming on, expiring in April. Cool. So that's just an overview of how things work. I'll just make that full screen so you can see that example, March 18. So that's how the trades are structured in the calendar. Hopefully that makes sense. If you've got any questions, hit me up in the comments.